But if I were to speculate on which commodity has the best chance of doubling, that would be silver. If the crash that you're talking about takes the form of the 2008 crash, which is really a collapse in confidence and the removal of liquidity from the market, everything goes down.
Yeah.
Because the sell decision isn't made by Lucian, it's made by Lucian's margin clerk. And he or she doesn't care what you think about an asset class. They're just looking for a bid. So if you'll recall 2008, the gold market held up for 24 hours. And then it fell apart too. They take no prisoners in that kind of war. What happens is that the most stable asset classes recover first. And if you look at the recovery of various financial markets in 2008, one of the first to recover was the gold market. Why? First of all, people go to gold in times of fear. It is an asset that isn't simultaneously somebody else's liability. You don't need to make a credit decision if you own gold. The second is that it was very obvious in the aftermath of the 2008 crash that the policy response would be to add counterfeit liquidity, which is to say to print, which obviously inures to the benefit of gold. The other asset classes that did well were very high quality short-term bonds, secure places to put cash to ride out the storm. The third asset class that did well was the largest industrial corporations in America, the most liquid markets with the best balance sheets and the best profit margins. In other words, there was a distinct flight to quality. What didn't recover for a very long time were tertiary assets, marginal assets. Sadly, there's no more marginal asset on the planet than a penny mining share. So if we have a real market crash, the asset class that your listeners are holding for maximum upside will deliver them, at least in the interim, maximum downside. And people need to understand that, which is why I ask people to have most of their portfolio in natural resources around beta, most of their portfolios around natural resources in the highest quality companies, with the most trading liquidity, with the best balance sheets, with current operating margins, and with their soundness and stability demonstrated by an earned dividend yield. I'm not saying to people, don't do what I did. I'm not saying to people, don't chase the 10 baggers, the 20 baggers, and the 30 baggers. Chase them with money that you can afford to lose. Chase them in circumstances where you are certain enough about the long-term future of the company that you can psychologically and financially weather a 50 or 60% share price decline should a bad market come. I think that depends on how much work you're willing to put into things and how opportunity constrained you are. I'm trying to allocate cash right now. I have too much cash. A wonderful problem, by the way.
Yeah.
If I were a normal human being, I would probably buy more gold, but I've been buying gold since the year 2000, actually since 1998. And I have a gold-centric portfolio. I don't need to buy more gold. In a speculative scenario, if you're playing unbridled upside rather than probabilities, I think you probably look at silver. Silver hasn't kept up with gold in commodity appreciation because the buyer in the market has been a fear buyer. It's primarily been central banks. If the precious metals narrative continues to the generalist investor, if past is prologue, when the generalist investor comes into the precious metals market, they come into the silver market. I'm not saying, by the way, that silver is going to run anytime soon. I think that gold will, for a while, continue to outpace silver. But if I were to speculate on which commodity has the best chance of doubling, that would be silver. I am afraid, honestly afraid, that gold will go much higher. I don't own gold because I think it'll go from 2,500 to 3,000.
Exactly.
I own gold because I'm afraid it'll go to 9 or 10,000. Is this a prediction? No, it's a fear. But let me give you the math, not the narrative behind the fear. The U.S. economy, and I'm a U.S. citizen, so of course I'm U.S. centric. The US economy is 23% of the world's savings and investment market. While the US is becoming less prominent, it's still hegemonistic. And the arithmetic around the US economy is scary. At the federal level, our on-balance sheet liabilities exceed $35 trillion. But much more scary than that is the net present value of our off-balance sheet liabilities. Unfunded Social Security, Medicare, Medicaid, government worker pensions, military pensions. That number, not the aggregate number, not the number over time, but the net present value of unfunded liabilities exceeds $100 trillion. So the aggregate liability of the US citizenry expressed by the federal government is $135 trillion negative. And that number is increasing by $2.5 trillion a year in the on-balance sheet liabilities, and recent estimates suggest $5 trillion a year in the off-balance sheet liabilities. Now, the aggregate revenues, the total revenues of the federal government are $4.6 trillion a year, which is to say that the deficit that we're incurring on an annual basis exceeds our revenues by more than 2 to 1. How do we get out of this circumstance? There's only 2 ways that I can think of. You change the nature of your payments, which is to say you means test Social Security, you reduce the benefit, you change the year that people accrue it, which will wreak real hardship in the US economy. And likely, you inflate away the net present value of the obligation. What the United States did in the decade of the 1970s is via inflation, they inflated away 85% of the net present value of their obligations. They devalued the US dollar in terms of purchasing power by 85% over 10 years. That coincided with an increase in the gold price from $35 an ounce, admittedly price controlled, to $850 an ounce. What I'm telling you in a very long-winded fashion is that if past is prologue, the US government will have to do again to the purchasing power of the dollar what they did in the decade of the 1970s. And it is likely to me that the financial asset that people will turn to as a consequence of the deterioration of their purchasing power in US dollar savings will be gold. I made it a point every quarter to call 25 or 30 business owners, both public and private. And I would say, how do you feel about the broad economy? Terrible. How do you feel about the direction of the US economy? Terrible. What's the outlook for your own business for the next 12 months? Wonderful. And I would say to them, you realize I'm having this conversation with 25 or 30 guys. And the answer is always the same. The world's going to hell in a handbasket, but my country's doing great. My company's doing great. And of course, collectively, you guys are the country. So you need to leaven some of this nervousness with the understanding that both the upsides and the downsides are concentrated around talking to public company, resource company CEOs. The response really depends on the nature of the companies. For the very small companies, the exploration companies, which are out of favor, new cash is very difficult to come by.
Yeah.
Conversely, if they're prospect generators, if they're people who are generating exploration ideas and selling them to major mining companies, the demand for high quality exploration targets has never, ever, ever been better. People like Elemental Altus, EMX Royalty, Kennerland, Riverside, Mondoro, the prospect generators are seeing large intermediates and major mining companies cleaning them out of exploration projects. So what that means is that we are gearing up for exploration on the quality side to shift into high gear. And that will be reflected in the market. This year, maybe not. Next year, almost certainly. Among the larger companies, you'll recall that at our conference, we had Sean Boyd, former CEO and now chairman of Agnico Eagle. I had the ability to have him for lunch, separate and apart from all the attendees, where I could actually talk to him. We've known each other for 30 years. And he just basically looked me in the eye and said, Agnico Eagle is in the absolute flush years. We have a wonderful team of people who've been together for 20 years. We have solved all of our major operational problems. The gold price is going up so that our margins will increase faster than our costs. We have a wonderful pipeline because we invested for 10 years when nobody else did. And this sort of bullishness among the best companies, not just the biggest, but the best companies, is ubiquitous. When the industry talks about a dearth of financing available for the small companies, what they're talking about is 80% of the small companies. I note that this dearth of financing isn't something I've experienced. For probably 80% of the financings that I've wanted to get invested in for the last 2 years, they've been oversubscribed.
Yeah.
So the market is doing a rational thing. It's beginning to discriminate in movie parlance between the good, the bad, and the truly ugly, which is helpful. I think that corrects itself. I think we're going to go into a full-fledged precious metals bull market, and after that, a full-fledged natural resources bull market, at which point in time, the investors will be just as stupid as they were 15 years ago. But for now, capital allocation is taking place, and that's the sign of a very healthy market. Now,